Greetings to all our fellow clients. Welcome to GKFXPrime Analysis and Education YouTube channel. This is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis for today, 5th of July, Wednesday. So first of all, let's review the major market movement. So the first instruments we review in USD JPY pair. The dollar slipped against the yen on Wednesday, shed 0.3% in early trade to fetch 112.95 yen, slipping further from Monday's 1.5-month high of 113.48 as concerns about rising tension between the United States and North Korea. So the yen tends to be bought back at times of heightened global uncertainty because of expectation Japanese investors may repatriate their foreign investments despite the country's proximities to North Korea. So Pyongyang said on Wednesday it had conducted a test of a newly developed intercontinental ballistic missiles that can carry a large and heavy nuclear warhead, triggering a call by Washington for global action to hold the isolated nation accountable for its pursuits of nuclear weapons. So the Pentagon condemned the missile test and said it was prepared to defend the United States and its allies against the growing threat from North Korea. At the same time, the Canadian dollar held firm, trading at 1.2934 per dollar after having hit a 10-month high of 1.2912 to the dollar on Tuesday, after the nation's central bank shift back an interest rate increase. So the Bank of Canada Governor Stephen Paulos told a German newspaper that Canada's inflation should be well into an uptrend by the first half of 2018, adding that policy normalization must begin before price growth hits its target. His comments prompt markets to price in a more than 50% chance of a rate hike at the central bank's next meeting on July 12, a dramatic turn from less than 2 weeks ago when barely anyone had bet on a tightening. And the euro was also supported by expectation the European Central Bank is edging towards winding back its stimulus following the hawkish comment from its president Mario Draghi last week. Although the common currency slipped early this week after rallying 2.1% last week, it has stabilized around 1.1359. So last week, top of 1.1445, its highest level in over a year, is seen as its immediate target. A clear break of the 1.15 to 16 area would signal a major departure from its trading range seen early 2015. Having a tad in commodities markets, the gold price was bounced back after a sharp fall on Tuesday. We're at $2,224.94 a troy ounce, up $5.74 or around 0.74%, amid the heightened geopolitical risk after North Korea said it had successfully tested fire an intercontinental ballistic missile. So South Korea military and Japan government confirmed that North Korea had fired an unidentified ballistic missile which landed in the Sea of Japan. Tokyo strongly protests that what it called a clear violations of UN's resolutions. So the timing of the launch is significant, come just days before leaders from the group of 20 nations are due to discuss steps to curtail North Korea's weapon programs. As for oil markets, it firmed on Wednesday with the US West Texas Intermediate crude oil steady at 47 6 cents per barrel on worries over geopolitical tensions in the Korean Peninsula and the Middle East. Although the prices were capped, supply remains ample despite an OPEC-led drive to rein in production. Traders said that firm prices came on the back of a sense of rising global security risk following North Korea's repeated missile tests and geopolitical crisis between Qatar and an alliance of Arab nations led by Saudi Arabia and the United Arab Emirates. So despite this, crude prices seem long below $50 per barrel, and traders said that it's because of ample supplies. This is a pledge led by organizations of the petroleum exporting countries, the OPEC, to hold back productions between January this year and March 2018 to prop up the prices. So despite that move, OPEC's oil exports rose for the second month in a row in June as well, according to the Thomson Reuters oil research. So the OPEC exported 25.92 million barrels per day in June and 450,000 barrels per day above May and 1.9 million per day more than a year earlier. So the market remains sensitive to the report of higher supply. So now we are going to review the data that released on yesterday, as well as the data that highlighted economic data focused today. So yesterday, Australia was released a series of data, including the retail sales for May and as well as the latest interest rate decisions. So the retail sales of Australia for May was grow better than previous with 0.6% compared to the economist focus. 0.2% is slightly higher, and the RBA, the Reserve Bank of Australia, was remain their interest rate is at a record low at 1.5%. So besides of Australia, United Kingdom also released its construction PMI for June with 54.8, which is slightly lower than the economist focus of 55. So as for today, we got to highlight the data and events. Okay, so UK is going to release its services PMI for June, and it is expected to be slightly lower compared to the previous 53.8. And later tonight during the North American trading hours, FOMC is going to release its meeting minutes, right? So trader was focused on this for further indications about the interest rate hikes, whether the Federal Reserve is able to hike the interest rates again one time in this year. So now let's check out the technical analysis. So the first instruments, we are looking at the GBP USD chart in 4 hourly. So GBP USD yesterday was retraced back from the recent high of 1.2035 and currently hovering below the resistance level 1.294. So currently it is still in an uptrend, so closing above 1.294 signaled for another upside momentum, and probably moving towards the previous high of the resistance level at 1.3035. As for the euro, it was retraced back from its recent high as well, and currently hovering around 1.1353, which between the both moving average lines. According to the MACD indicator, the both movement line in the indicator were pointing downward now, and the downward momentum is still strong, so it is expected to move slightly lower in short term, but the trend direction will remain pointing upwards. So I would recommend to follow the trend directions and wait until the price close above the recent high, then we follow with a long buy position on it, and the next target for the uptrends should be at 1.1533. We're having a tap in the Asian markets. The Kiwi, the New Zealand dollar against the US dollar, were trading flat between the range of 0.729 and 0.727. So according to the MACD, the both movement line were pointing nowhere and move flat, okay, moving flat. So this signal that the New Zealand dollar and US dollar pair might probably to be traded in the range between 0.729 and 0.727 for short terms. So for longer term directions, it only can be determined after the price breakout from either side of the range, either closing above 0.729 or 0.727. Then only we can determine the further directions of the pair. As for the Aussie AUD USD pair in 4 hourly charts, it is currently still traded in an uptrend, so it will show some rebound signals from the 60 moving average line, which show by the green color lines in the chart. So based on the MACD, the both movement line is still pointing downward and the downward momentum is still exists. So I would recommend to wait for further and clearer upward signals, then only we can determine for continuations of the uptrends. Okay, otherwise we can wait until the price close above the resistance level of 0.764, then there is another buy signals for us. So looking into the Japanese yen, the pair USD JPY in 1 hourly charts was moved higher in today morning, right, and moving towards the previous high or the resistance level of 113.38. So based on the MACD indicators, the both movement line is now pointing the way, and the momentum is decreasing and near to zero. So this means that the pair in short term is expected to be traded in a tight range. Alright, so I would recommend to get a buy position after the price close above 113.38, then the uptrends might be continue. As for the commodities market, the gold price was rebound from the recent high of 1220.1 of support levels and currently was hovering around 1227.2. So based on the MACD, the both movement line is start crossing from the bottom to tops and the downward momentum is decreasing near to zero. Alright, so this signals that the gold price might probably to move slightly higher as a retracement period in short terms. And it is expected to moving towards the 20 moving average lines, or we can refer to the resistance level of 1237.5. Alright, so the trend direction, the longer term trend direction is still suggest to pointing downwards. So we should wait until the price to retrace from higher level, then we follow the trend directions. As for the oil price currently was floating around 47 per barrel, and based on the both moving average lines, is still expanding and pointing upwards. So this means that the trend direction remains upwards. Okay, so it is expected to move further higher after the price close above the previous high, and it will probably to move towards the next target resistance level at 48.13. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.